This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil futures fell on Tuesday, reversing steep gains made in the past two sessions, as investors turned cautious ahead of a meeting of OPEC Plus this Sunday when the producer group may discuss deepening supply cuts. Brent crude futures fell 64 cents, or 0.8%, to $81.68 a barrel by 0630 GMT, while U.S. West Texas Intermediate crude futures were at $77.21 a barrel, down 62 cents, or 0.8%. Both contracts climbed about 2% on Monday after three OPEC Plus sources told Reuters that OPEC Plus was set to consider whether to make additional oil supply cuts when it meets on November 26. A surge of diesel and gasoline exports from China in the last northern winter eased then prevailing fuel shortages in Asia, but a repeat performance this year is unlikely. China's exports of refined products have eased from high levels in recent months, partly as a result of stronger domestic demand, but a lack of available quotas and shrinking profit margins for fuels have also played a role. In the northern winter of 2022-23, China played an outsized role in easing a squeeze on the availability of refined fuels, caused largely by the loss of some shipments from Russia as Western countries sanctioned it over its invasion of Ukraine.
Moving on to the top news in the energy sector.
France, backed by the United States, plans to seek a halt to private financing for coal-based power plants during the UN climate conference later this month. Three sources familiar with the deliberations told Reuters in India and Europe. The plan, which was communicated to India earlier this month, will deepen divisions at the COP28 summit in Dubai running from November 30 to December 12, with India and China opposed to any attempt to block construction of coal-fired power stations for their energy-hungry economies. France's Minister of State for Development, Chrysila Zakharopoulou, told the Indian government about the plan, called the New Coal Exclusion Policy, for private financial institutions and insurance companies, two Indian officials said. The head of Japan's oil industry body said on Monday he expects OPEC Plus to extend its supply curbs after December to support oil prices. OPEC Plus is set to consider whether to make additional oil supply cuts when it meets on November 26, three OPEC Plus sources told Reuters after crude prices dropped by almost 20% since late September. At least, the current production curbs will probably continue, including additional voluntary curbs from Saudi Arabia and Russia. Shunichi Kito, president of the Petroleum Association of Japan, PAJ, told a news conference, noting that Saudi Arabia wants to keep oil prices above $80 a barrel.
Next, we have the top news in metal markets.
The global refined copper market showed a 55,000 metric tons deficit in September, compared with a 21,000 metric tons deficit in August, the International Copper Study Group, ICSG, said in its latest monthly bulletin. For the first 9 months of the year, the market was in a 17,000 metric ton surplus compared with a 401,000 metric tons deficit in the same period a year earlier, the ICSG said. World refined copper output in September was 2.33 million metric tons, while consumption was 2.39 million metric tons. Iron ore futures rose for a second session on Tuesday, with the Singapore benchmark hitting an 8-month high, as sentiment was boosted by Beijing's latest support for the property sector and concerns lingered over possible supply disruptions. The most traded January iron ore on China's Dalian Commodity Exchange, DCE, ended daytime trading 1.93% higher at 978 yuan and 50 fen, $135.69, a metric ton, the highest since November 15. The benchmark December iron ore on the Singapore exchange rose 1.34% to $132.85 a ton, as of 0707 GMT, the highest since March 15.
We will now look at the top news in the agricultural sector.
Ukraine's sugar industry, one of the country's few profitable farm sectors, may continue to expand the planted area in 2024, and with good weather the 2024-25 exportable surplus could jump by around 50%, the Producers' Union Akasuga said. Ukraine produced 5 million metric tons of beet sugar during the Soviet era, but has since reduced production to just over 1 million tons due to export problems and competition with sugar made from cane. However, the temporary suspension of European import tariffs for Ukrainian agricultural products from June 2022, combined with the decreasing profitability of grain and oilseed, previously key for Ukraine, led to a jump in the areas sown to beet in the beet harvest.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.